Hello and welcome to Donatien Investment. This analysis is for Pan American Silver on the Toronto Stock Exchange as of 7th of August 2026 with a share price of 67 Canadian dollars 40. The full report is on Donatien.ca. A short-term buy at 67 Canadian dollars and 40 cents. Half size because the metals reversal is only a few sessions old and Q2 earnings land on 12 August. A cheap net cash silver and gold producer whose medium call is buy and long call is strong buy. Pan American Silver is one of the world's largest primary silver producers, running silver and gold mines across Canada, Mexico, Peru, Argentina, and Bolivia. It digs ore and sells refined silver and gold, plus zinc, lead, and copper byproducts at prevailing spot prices. And because roughly half its revenue is now gold, it is best read as a diversified precious metals producer rather than a pure silver play. What sets it apart is scale and diversification, reserves of about 452 million ounces of silver and 6.3 million ounces of gold, a low all-in cost base, and cash flow spread across 5 countries rather than one mine. Think of it as a large, financially conservative net cash miner geared to the direction of the metal price. On the numbers, this is a cheap, well-run business. Quality scores 73, valuation 63. Pan American mines silver at an all-in cost near $17 an ounce against a spot price near 62, and gold near 1,775 against 4,270, margins that are extraordinary by any standard. It trades at roughly 0.7 times net asset value at spot metals, a discount, and about 40% below the consensus analyst target of 95 Canadian dollars. Return on equity is nearly 21%. The balance sheet is net cash, and behind it sits a durable bid, central bank buying, de-dollarization, and constrained mine supply. That is why the long call is a strong buy. A miner is a geared bet on the metal, so we read the trend, not just the level. Silver bounced roughly 8% off its mid-July low and reclaimed a flattening 50-day average. Gold is back above its own. Pan American reclaimed its 50-day line on about twice normal volume, with momentum turning up, so the technical entry path is met and timing improved to 58. But we sized this half, not full. The reversal is only 2 or 3 sessions old. The stock is still below its 200-day line near $70.25, and Q2 results land after the close on 12 August. A print that regularly moves the stock more than 5% either way. The direction is buy. The earnings gate is why it is a starter, not a full position. The risks here are real and we weight them equally. First, the reversal is young. The turn in silver and gold is only 2 or 3 sessions old, and the stock is still below its 200-day average. A young reversal can fail, and because the miner is geared, it would fall harder than the metal. Second, the 12 August earnings print is a genuine binary. Pan American routinely moves more than 5% on results, so a weak quarter or an all-in cost blowout could hit the stock regardless of the tape. Third, the metals themselves. If silver loses its reclaimed level and rolls back over, the whole thesis inverts. The bear case is 55 Canadian dollars, below today's price, with the stop at 59. That commodity leverage is why the position is half size and why we watch the metal, not just the stock. Now weigh the risk against the reward. The bull case is roughly 48% above today. The base case, the most likely, about 26%, and the bear case a fall of about 18%. So you are risking about 18 to make 48. So, our call on Pan American Silver on the Toronto Stock Exchange, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at Donatien.ca. The link to the full report is in the notes below. Have a great day.